Hello, I'm Marcus again, and today I want to talk to you about something that confuses almost every trader, but hardly anyone really understands. The fundamental difference between a backtest and live trading. Because here's the problem. There's a huge difference between the two, and this difference explains why many traders think the system doesn't work, even though it actually works perfectly, but only under one very specific condition. And that's the condition where most people fail without even realizing it. Today I'm going to show you what this difference is, why it matters so much, and most importantly, what you can do about it. So stay with me. Let me start with a question. Do you know Christian? Christian is one of my students, and he did something that not many people do. He conducted a manual backtest, 6 years long, 4,102 trades, all evaluated by hand, analyzed, documented. Why? Because he wanted to strengthen his own confidence in trend following. He didn't just want to believe it works. He wanted to see it with his own eyes in the data, in the real numbers, in the mathematics behind it, not only what I have told him. And the results were impressive. 6 years, 6 markets. Every single year profitable. 23% in 2020, 42% in 2021. 20% in 2022, 30% in 23, 114% in 2024. That was his best year. And through March 2025, already 77% profit. The mathematic works. The system works, period. But here comes the critical point. And I want to focus with me on this. That was a backtest. In this backtest, 6,000 trades, 76% were negative or break-even. Only 24% were winning trades, winners that in the end compensated for everything else. 76% losses. That's almost as bad as Pablo Picasso, who created 150,000 artworks and only the 1,170 of them are known as masterpieces. That's 0.7%. But we don't remember the 99.3% failed artworks. We remember the 0.7% masterpieces. And that's exactly how trend following works too. 76% of your trades will lose. That's not an error in the system. That's how the system works. But, and here comes the critical word, but these 76% losses are small, while the 24% winners are huge. And the huge winners don't just compensate for the small losses, they massively overcompensate. That's the Pareto principle in practice. That's the mathematics of trend following. But now comes the critical difference. And this is the point I want to explain to you. In a backtest, there are no errors. Christian looks back, he analyzes, he sees what the market did. There's no emotion, there's no pressure, there is no fear that real money is at stake. There is no hope that the market will turn around anyway, that he should still move his stop loss, that maybe this time an exception is justified. In a backtest, no pressure, no emotions, no rationalizations, just the data, just the mathematics. And the mathematics works perfectly. But in live trading, you're sitting in front of the screen, the market is moving against you, you have 3 losses in a row, and now you see the 4th setup. Should you follow the rule and enter, or should you say, oh, I'm going to wait for a better setup? Yeah, that's when the errors happen. You move your stop loss because you think it's too tight. You deviate from the rules because it feels right. You make an exception because you think this time it's different. And these errors are invisible. You don't see them as errors because you rationalize them away. You think, it's a smart adjustment. Yeah, that's the problem with self-teaching. That's the problem when you trade alone without someone looking from the outside. You don't see your own errors. You skip the trade after 3 losses because you thought, I'll wait for a better setup. Was that a smart decision or was that an error that cost you the trade that would have brought 10R? You don't know. You are in a trade that's already 5R in profit and you think, maybe I should secure the profit. You exit. If you had held on, that trade would have brought 15R. But you don't know that because you are already out. You don't know if that was a smart decision or an error that costs you 10R. And that's exactly where the blind spot is. The mathematics says 76% small losses, 24% big winners. That's the structure that works. But if you turn the small losses into big losses, because you move your stop loss, because you adapt the rule, then the mathematics doesn't work anymore for you. Then you have 80% big losses and only 20% small winners. And then at the end, there is no 114% profit, but losses. And that's the problem that almost all self-taught traders have. They make small errors that feel right, that seem logical, that are reasonable in the moment. And these errors destroy the mathematics step by step, trade by trade, until the end, nothing works anymore. And they don't understand why. What happened? Yeah. And now comes the next part, which is crucial. You don't even realize you're making an error. You think it's an improvement. You think you're adapting the system to make it better, while in reality, you are destroying it. That's the subtlest trap in trading, that the errors don't look like errors. They look like smart adjustments. And that's exactly why a teacher isn't optional. Not because you can't understand the rules, they are simple, but because you need someone who looks from the outside and says, stop! What you're doing right now looks like a smart adjustment to you, but in God's sake, it's an error. It's one of the same errors that all the other traders make who learn alone. And if you keep doing this, the mathematics won't work for you. That's what a teacher does. He sees what you don't see because he's seen the same errors in hundreds of students, because he knows where the invisible traps are, because he recognizes when you're about to destroy the system while thinking you're improving it. I'm talking about a lot of experience, believe me. That's also why education isn't 2 weeks and not 2 months. It takes 2 years, not because the system is so complicated. The rules aren't complicated, but 2 years is necessary because your brain and your psyche need time to adjust to a truth that completely contradicts our intuition. This truth is 76% failures are not a sign that the system doesn't work. They're a sign that you're exactly on the right path, that the system works exactly the way it needs to work. And to accept this truth, not just intellectually, but also emotionally, psychologically, that takes time. It takes hundreds of trades that you do with feedback, where I look at every trade with you and say, yes, that was right, or that was an error, free trade, or there you made an error, you made a misdeed, and here's why that was a misdeed even thought it felt right. And when I do that hundreds of times with you, then your brain starts to recognize the new patterns. Then your prefrontal cortex starts to learn. Then the neurological automation begins. That's not superstition. That's not esotericism. That's pure neuroscience. That's how brains learn to automate new behaviors. And that's exactly why I teach the 111-500 principle. Your brain needs 11 repetitions to build an additional neural connection. It needs 111 repetitions to recognize a pattern. And it needs 500 repetitions to neurologically automate something to the point where you don't have to think consciously anymore, where discipline works automatically, even when emotions run high, when even your family asks, and even when Instagram brags again. After 6 months, if you're doing 2 to 3 trades a week, you've maybe done 50 to 100 repetitions. That's 10 to 20% of the way. You are not at the end. You're not even in the middle. You're just at the beginning, where your brain starts to recognize the patterns. But it hasn't automated them yet. And right in this phase, when you're at 10 to 20%, the pressure is greatest because every trade still takes effort. Every fiber of your body is still fighting against the rules. Every single trade still needs your full conscious attention. That's so exhausting that most people quit in this phase. They think this doesn't work, or I'm not good enough for this, or maybe trading isn't for me after all. And they quit right before the point where it starts to work, where the neurological automation begins. Yeah, and right here I want you to ask yourself a question completely honestly, without me giving you the answer. How likely is it that you alone, without feedback, without someone correcting your errors, your misdeeds, how likely is it that you'll do these 500 repetitions without making systematic errors that you don't recognize? Do you know anyone who really taught themselves trading, really successfully, profitable for years, not 3 months, without a teacher? Yeah, I know maybe such people exist. There are always exceptions. But the question isn't, is it possible? The question is, how likely is it? And how much time are you willing to invest to find out if you are one of those exceptions? Because Christian's story isn't an exception. His story is the norm when you are trained properly. His story is what happens when you trade without misdeeds. But his path to this misdeed-free trading, that wasn't an isolated process. He had a teacher, he got feedback, he learned that what he did was a misdeed, even though it felt right. And because he understood that, because he learned to see his own misdeeds, that's why the mathematics works for him. So here is the essence of what I want to tell you today. The mathematics of trend following works. Christian proved that to you. The data shows it. 130 years of trend following history shows it. The question is not whether the mathematics works. The question is, does it work for you? And the answer to that question depends on whether you learn to avoid the misdeeds that all the other self-taught traders make, the invisible misdeeds that feel right but seem logical, but destroy the mathematics. And to learn that, to get your brain to see these errors and correct them, you need a structured system and you need feedback. That's why education isn't 2 weeks and isn't 2 months. It takes 2 years. Not because it's too complicated, but because your brain needs time to automate a new reality. That losses are normal, that 76% is not wrong, but necessary, that the mathematics works if you don't destroy it. I'm Marcus. If you want to know more about structured education, you will find all the links in the video description. And if you want to see the next video in this series, subscribe my channel. That's the best way to stay updated. Thanks for listening. See you in the next video. And as always, have courage and be kind. And may the force of the logic be with you, cause this is the way.